All right. So we did get like a little bit of a bearish signal where ES failed the prior week close or yesterday's close, I guess it was earlier today. That was our high for the day where we got rejected, and then we kind of just slumped the rest of the day. Closed back below this trend. Still probably some support around 63.74, but we're definitely going into the Powell speech tomorrow morning more bearishly positioned than we started off the day or ended yesterday. Bulls probably really wanted 6,400 in order to get some of that gamma underneath their positioning in case they had to sell off. And so what that means is that if the Powell speech is particularly hawkish, and it may be released in advance of him actually talking, try to keep that in mind. This could sell off really hard because there's very little downside support here. The next important levels to the downside after 63.74 on ES are probably going to be down here around like 63.34, and then 63.18 is also a fairly important level. This is a rejection, and that's somewhat confirmed now. But I think that 63.18 mark is really gonna be where things start to pick up to the downside. So we'll see what happens tomorrow. Obviously, a lot of the rate cuts that are priced in are pinned on what Powell's gonna say, and how he's reacting to the administration currently. Do try to remember that this is not a Fed meeting, and so I'm not sure how much he's going to directly address the press. Usually it's just a keynote speech and then it's over. So, there's probably not a lot of volatility in his answers, and they are going to say the thing that, is most in line with their intention, which I don't think has changed much with the labor data, but we'll see. Like obviously inflation's high, labor does look like it's doing fine despite the revisions. I guess there was a little bit of weakness in jobless claims this week, but nothing. I don't think any data that's going to really swing them. And NFP bounced back, so I mean, 6320 fly is going to print. No idea. Out here, not really regaining Vega neutral. Closed near the bottom of the market maker's expected move for the day, just a tiny bit higher. But fairly persistent selling at the upside resistances. So bears are still piling in and remain advantageously positioned. There's very little supportive delta on the weekly chain. Delta neutral is very close to spot. If we lose that, it's probably a pretty straight shot down to gamma neutral on the monthly. Lose gamma neutral on the monthly and things actually get pretty bearish. So still a very slow breakdown for now, but definitely going to be a big day tomorrow. Dollar up today. Yields up pretty much across the curve, but particularly across the 2 and the 5 year as rate cuts continue to get priced out. The Fed speakers today were pretty hawkish, which is kind of helping that along. In addition to that, we're seeing dispersion breakdown. So there is definitely long volatility demand on the index. There is short volatility demand in the underlying components. We're still seeing that hit tech the hardest. Russell was actually up today. Dow was up yesterday. So there is some sector rotation, and some of the kind of forgotten components of breadth are doing okay. RSP did start to have a little bit of a worse day, but been fairly stable through the downside on ES. So part of the index, it's just not the most heavy part of the index, is outperforming. Commodities continued their bounce higher off of support at like 99. Not a big move in gold today, but silver up and oil continuing to rise. Correlation on the 3-month is continuing to break down, but we still aren't seeing a big increase in bond volatility. Today's move in the yield curve will probably push bond volatility up a little bit, but yeah, it's still shockingly low. I mean, like really low. Like we have some of the lowest bond volatility we've had since like 2022 right now. So this is kind of surprising still. leverage on the carry moving up again today, but so is demand for long volatility with forward yield on vol ticking up to negative 10.46%. So we're still not seeing people go aggressively long vol. They're just not shorting it really. So we're getting volatility picking up with the event approaching, but we're not seeing a lot of vol shorting coming in. A little bit, but not a lot. And leverage on the low end of the curve, it's up, but it's really low right now. Remember, as those spreads tighten that between USD and JPY, that gets harder and harder to carry leverage on. Today, I actually saw a big drop in out of the money put demand, but that didn't lead to anything. So may still be seeing bears building up position. You can check skew 15 minutes after close, so in like 8 more minutes, and it'll print today's value. Probably something good to look at today. See if there's a lot of tail risk demand going into Powell's speech tomorrow. It might give you an idea of how participants are feeling about what's going to happen. Breadth narrowed yesterday with 50-day moving average stocks declining, but 20-day moving average stocks picking up. So there was a little bit of a bounce back in tech yesterday, which I think we all know. Today that was lost, so it probably spread back out again. Correlation between VIX, cash VIX, still falling, which is a little weird for the second day in a row. Even though I don't think we're seeing a lot of short vol demand. VIX and VX both up today. There's still a little bit of a breakdown in correlation. And Fed Fund futures pricing in fewer rate cuts yet again, with the spread on the January contract moving down 11.5%, which is pretty significant. And, that was on the back of those Fed speakers that we had today and things Trump said. So, and then, this is 10-2-year, not too big of a difference. Out here, we didn't quite test the EMA 30, still haven't. Floating above it, but definitely a bearish bias on yesterday's recovery not leading to a bounce. So we did have a bounce yesterday, but that bounce failed. So if we go down to like the 1 hour here, you can see that a little bit better. This isn't good. Right, this looks like a downside, like getting ready for a downside continuation. And then, the next important support is 62.87 out here, and then 62.01, which was kind of where the rally to the upside kicked off back in July, and then we got support there again in early August. So losing this level, falling to test 62.01 is probably pretty bearish. I doubt there's substantially more buyers there than there were previously. So unless something shifts dramatically on the macro side, that test is bad. You're gonna get probably a lot of profit taking. It's about the level where CTAs are going to start going like net short. Really important, 62.01. And then I think that's about it. Yeah, just shit performance almost everywhere today. Nothing really stands out. Oil, I guess, a little bit. Walmart down 4.5%. Obviously not great on the consumer confidence side of things. And then Meta down. Yeah, but not much. Not even. And this is we did see some sector rotation last week with non-durables and health technology, kind of seeing some improvements. But then, this week we're not seeing any rotation, which means that we might just be seeing selling pretty broadly, selling, holding, but not a lot of activity or interest to the upside on anything, which is as that kind of flattens out. That can also be, indicative that people are going to start selling. Like if bad news hits, people are going to dump shit. Always appreciated. Yeah, anytime. Thank you guys so much for tuning in. Don't forget, tonight we have the GS Roundtable. We're going to be doing that at 9 o'clock. And then I'll see you there. Later, guys.